Hey everyone, welcome back to ScribbleStokes. Buckle up because the crypto market is giving us some serious whiplash right now. As of March 2026, the Fear and Greed Index is sitting at a chilling 28, deep in fear territory, down from 45 just 2 weeks ago. Are we staring at a capitulation moment, or is this the dip we've all been waiting to buy? Let's break it down and see if now's the time to make a move. First, let's get some context on what's driving this fear. Bitcoin is hovering around $52,000, down 18% from its early March high of $63,500. Ethereum isn't faring much better, trading at $2,800 after losing 15% in the same period. The broader market cap for crypto has shrunk by nearly $300 billion in under a month. Now, the Fear and Greed Index, which pulls from volatility, market momentum, social media sentiment, and more, is flashing red. A score of 28 typically signals panic. Think late 2022 bear market vibes. But here's the kicker. Historically, extreme fear often marks a reversal point. So, are we near the bottom, or is more pain coming? Let's dive deeper into the data to figure this out. Looking at on-chain metrics, whale activity is picking up. According to Glassnode, over the past week, wallets holding 1,000 plus BTC have accumulated roughly 25,000 Bitcoin, worth about $1.3 billion at current prices. That's a strong signal. Big players are buying while retail is selling. Exchange flows also show a net outflow of 18,000 BTC from centralized platforms like Binance and Coinbase over the last 10 days. Less supply on exchanges often means reduced selling pressure. On the technical side, Bitcoin's RSI on the daily chart is at 38, flirting with oversold territory below 30. We're also testing a key support level at $50,000, which held strong during the January correction. If we break below that, though, $48,000 is the next line in the sand. Resistance, meanwhile, sits at $55,000. Breaking that could flip the momentum. For Ethereum, support at $2,750 is critical, with resistance at $3,000. The question is, are these levels going to hold with all this fear in the air? Now, what does this mean for us as traders? A fear and greed score of 28 suggests the market is oversold, and history shows these levels often precede bounces. Think back to November 2022, when the index hit 25. Bitcoin bottomed at $16,000 and rallied 40% in 2 months. But let's not get ahead of ourselves. Macro conditions in 2026 are still shaky. Global interest rates are still high, and regulatory chatter around crypto isn't helping sentiment. Plus, if whale buying slows or we see a spike in exchange inflows, that could signal more downside. On the flip side, if Bitcoin holds $50,000 and the RSI dips below 30, we might see a short-term relief rally to $55,000 or higher. For altcoins like Ethereum, a break above $3,000 could trigger FOMO and pull smaller caps up with it. The Fear and Greed Index isn't a crystal ball, but paired with on-chain data and technicals, it's a solid gauge of market psychology. Right now, it's telling us most traders are scared, often a contrarian signal to start paying attention. So, where do we go from here? I want to hear your thoughts. Are you stacking sats at these levels, or are you waiting for more confirmation? Drop a comment below with your take on the Fear and Greed Index and whether you're seeing buying or selling signals in this market. If you found this breakdown helpful, smash that like button and subscribe to ScribbleStokes for more crypto analysis. We're dropping videos like this every week to keep you ahead of the curve. And hey, while the data is pointing to a potential opportunity, always do your own research and manage your risk. The market's a wild place and anything can happen. As I see it, this dip to extreme fear could be setting the stage for a reversal, but only if key supports hold and whale accumulation continues. If we break lower though, we might be in for a longer grind. So, tell me, do you think March 2026 is the turning point, or are we just getting started with the pain? Let's talk about it.